Hi everyone. I just want to do a quick introduction to this particular tool, which as part of my program you'll have access to. It's a great deal of fun. Basically, you can sliding scale move your own profit growth estimates. Here I'm looking at PayPal. Okay, there you go. There's PayPal. You can look at any UK American stock. You know, I've got an obsession with American stocks, even though I'm British. And you can slide this along back and forth. And as you do, this will move and work out your valuation. Now, here's where it gets really interesting. Okay, your valuation compared to the current share price and what the analyst's lowest forecast is and what growth they're implying. Okay, and what the analyst's highest forecast is and where we are at the moment. Right, now I'll tell you why that's interesting. First of all, the market expectation in green, the market expects PayPal to grow profits at 45.3%. That's based on what its current share price is. That's what's implied by that share price. That profits will go at 45.3%. There's lots of different mathematics which goes into that. However, my valuation, I'm not saying this is actually my valuation, I was just playing around with it, okay, is if PayPal grows profits more than what the market anticipates and at 70%, then the stock should indeed be $333. So on my basis, PayPal's share price is undervalued by 58%. Now, you know, as you go through the program, I've done some video recordings on a website, online website called Vuru, which no longer exists. It's exactly this tool, but on here. So wherever I've mentioned Vuru, you can use this tool instead. All the details on the program of how to get access to this free tool, okay? Now, here's even better. To help you estimate PayPal's profit growth, because obviously, well, Alpesh, how am I going to know what PayPal's profit growth is and what its current valuation is and whether I should buy it or not? Well, here's some interesting facts you might want to consider. Last year, profits declined by 15%. So I might be being a bit optimistic to 70. Okay, profits over the past 5 years grew by 16.8% per annum. Still being a bit optimistic? Well, I could make a thesis that we're all sitting at home now and they've been accelerating and they're growing, blah, blah, blah. And I might say, well, I'm going to be a bit optimistic despite what's happened over there, and I might put 25% in. Well, all of a sudden, that looks overpriced, doesn't it? Now, forecast range, well, you've got the forecast range, bearish analyst forecast, and the most bullish. And it just shows you how these analysts are sort of, I don't know, they obviously don't drink at the same nightclub. There's a difference of almost 100% between 94 and 172. So there's a big difference between the two companies. What's really useful here is industry and market trend. The IT industry grew at 12% last year, and the companies in the US grew at 2.9%. Well, this is a high growth tech company. And of course, it's not just what's implied by profit growth. It can just be momentum. Don't forget, the market isn't trying to sit. We're not all sat there going, what's the implied profit growth? Sometimes it's just momentum. I know you're going to buy it, and so I'm going to buy it. Now, if I'm interested in PayPal as a value company, or sorry, as a quality company, not value, quality company, so it might be overvalued, but it's a quality company which I'm willing to hold for 1 year, 2 years, 3 years. In other words, it's a strategic statement for me that it's something which I think is going to be there for a long term, like Amazon. By long term, I mean 3 years, I'll reevaluate. This falls into it. I care less than what the valuation today is. And I'm not going to sit on the sidelines and say, well, let's wait for a dip, because if I'm going to make a strategic decision to hold this for 3 to maybe 5 years even, then I don't need to worry about the next month or two. And I might kick myself if it's 20% lower next month, but because I've got a 5-year horizon, it doesn't matter because it's a quality company. So those are the stages that I'm assessing. Anyway, have fun with the tool. It's on the program, and the details and the URL and everything else for accessing it for free to all the students is on the program, the Great Investments program as well. Have fun.